What does an investor do about trade? You raised that, and there's a fairly wide range right now, almost binary, about whether it goes well or it goes badly. How do you protect against that? And what are the secondary effects or the third order effects, not just the immediate effects?
Yeah, so it's been hard to just parse out what the effects have been so far. We don't have the counterfactual where the S&P is much higher because, say, we didn't have any trade risk at all this year. I do think as a result of the trade risk, one of the things we've seen is the valuation on the S&P has come down. So the stock market hasn't done a whole lot actually since the end of January. It's come up a little bit, but earnings have been much stronger. So as a result, the market looks somewhat less expensive. So in that sense, you are being paid for that risk. You're being compensated for that trade risk, but I say not in very specific ways. So if you're talking about how much worse could the situation with China get, how much worse could the situation in, say, technology names in the U.S. get if this escalates further and we start seeing taxation on consumer goods coming from China.
Are you seeing it reflected in sentiment at all? Is there dampening of sentiment that might actually inhibit some of the so-called animal spirits?
It's all relative to the last year or the last 10 years. So sentiment is still quite strong compared to where it's been in the last 10 years, but just compared to the last year, you're starting to see a bit of a
10 years have been a pretty rough 10 years.
Sure, but in the context of an environment where we've cut taxes, where the economy is growing strongly, it's not the worst year to have a trade war. There's no good year to have a trade war. But because the environment is relatively strong right now, sentiment is being affected less than I think it would be if there were other flashing yellow lights about the economy.